Did you think the financial system was safe? Did you believe that the Fed rescued it once again? Well, it turns out this repo situation has only become worse over time, but they wouldn't allow the system to fail, so we're good, right? All you have to do is look back at the pages of history to understand that central banks are present every single time there's a crash, yet they still occur. They haven't become any smarter, any wiser, just the same old group of people purposely manipulating the financial system, allowing liquidity to flow or dry up on command. This is going to get very interesting. You came here for the truth, so let me unveil that for you. Today we're going to look at what's happening with the repo madness. I'm going to show you directly from the Federal Reserve. We are going to look at the former bond king, Bill Gross, and what he had to say about it. We're going to talk about JP Morgan and their influence in the market. I have a lot of information to cover, charts, articles, everything in between. Let's get into it right away. Worries grow over the Fed's efforts to fix funding issues. Quote, this is all likely to get much worse. That's not me saying it. That's actually JP Morgan. Now, these individuals here are in the know. They are seeing it on the ground. They know exactly what's happening because they see this market every single day. Not in the way that you and I do. They work on the inside. This is not just any normal analyst. These individuals, like Bill Gross, who we'll talk about it in a moment, are so integral to what happens maybe in the bond market, maybe in the stock market, not just simply trading on it. They're integrated completely. When they say something, we need to listen. It doesn't mean that we're going to believe everything they say, but certainly we need to take note. I'm using this article here to set up what we'll talk about throughout the video. Look at this. Federal Reserve officials have been working feverishly to address issues that popped up more than a month ago in the overnight bank lending market. This has been going on for a little while now. They told us initially, okay, it's just going to be a couple days. We had Jerome Powell who actually stated, this is nothing to worry about. Have no fear. We're going to take care of it in a couple days. It went beyond that, October 10th, then it was October 11th, then it was into November. Now it's next year. You know the drill. Now this right here has expanded to a level that nobody in the financial industry was aware that it could have gotten to this point, because we are being told that as long as the trade deal was going to go through and everything was going to be totally fine, we would see stocks hit new all-time highs and everything would be fine and dandy. It hasn't been that way at all. Now take a look at this. The central bank last week started a new bond buying program that is expected to grow its balance sheet by $60 billion a month to start. And actually what's interesting about this is that the interviewer who was asking Bill Gross questions, he actually was making a joke about this and suggested, this isn't QE, don't worry, it's not QE, but then pressed him to talk about it. And Bill Gross actually said, quote, it's QE with treasury bills. That's not me saying this, although I do agree, that's Bill Gross. Doesn't matter what you think about Bill Gross, it doesn't matter what his performance is or anything else. This is an individual who is at the highest level in the bond market. Of course, he's not in the position he was before, but somebody like this, if you mention his name to anybody in the financial industry, they know exactly who he is and his influence. So when he says something, definitely we should be paying attention. He also said this, ultimately it reminds me of the South Sea bubble. Ultimately, when the government owns everything, people figure it out and you have a bubble, and then you have the result. And it's interesting that he actually hesitates to say the result. He didn't want to be quoted saying crash, collapse, crisis, any of these terms, but he's willing to say the result. And that's why you didn't get any quotes of him all over the internet or any of the newspapers saying that there's going to be a crash, saying that this is the way it is, because he hid that in this jargon. Now, I am here to dissect that information for you, and it's very clear. I watch the videos, I look at the repos, I cover all the data, I bring it to you in these videos. I hope you do appreciate that, save you the boredom. But what he suggests here is absolutely truthful in that when the government buys everything, people eventually figure it out. Look at what's happening in Japan. No new investors are going in. It's only the government buying more and more. It's ridiculous. People keep suggesting that everything is just fine in Japan and this is the model for success, but it's absolutely not. It's a joke. It's a joke. They are fictional at this point. If you're gonna look look at failure, then Japan is a primary example. They won't let the cleansing process happen. The economic detox, as I referred to in my books, needs to occur in order for the system to become healthy once again. It's not going to be allowed to occur, as you can see right now with the repo situation. And of course, we can tell this is only going to make things worse in the end. Here you can see directly from the New York Fed website, we're looking at the repo and reverse repo operations. All of this is listed here publicly. Now, if you come to the site, you will see the most updated information. There are two columns to pay attention to. There's submitted and there's accepted. Of course, there is a maximum at how much they can actually accept, but the submitted number is what's interesting because that shows you the demand. And I'm going to show you some charts associated with that. First, I wanted to look at this, the schedule of overnight and term repurchase agreement operations. You don't have to rely on the mainstream media articles to tell you what's going to happen. You don't have to wait for the next Fed meeting and hear Jerome Powell talking about it. You can actually see what their plans are on a daily basis. Right here, there will be a link in the description. You don't have to wait for me either. Just save this link and you'll know exactly what's going to occur. But then we need to see what the market wants on those particular days in that particular month. And it seems like it's exceeding expectations every single time. And that shows you that there is a very serious problem with liquidity. There are three things to note here in this chart. The pink bar chart is submitted, the green is the accepted, and the red line is the oversubscribed ratio. And the oversubscribed ratio right now on the 22nd of October is 5.5. This has been getting worse day after day after day. They're only allowed a maximum, but we're going to see those numbers increase, okay? And I'll touch on that more in just a moment. Take a look at this and understand where we're going. Not getting better, we're actually getting worse. I'll show you two charts right now. We're looking at the overnight operations, and this is going back a month, basically, September 17th. And day after day after day, this has been getting worse. The term repo operations, in addition to the overnight operations, have been making up a large sum of capital that is needed to help out this market. When you add the two together on the 22nd, you're not actually getting 100 billion, okay? It's 99.9 billion. I wanted to make that clear. It's not 100 billion because maybe then they would have to call it QE. Now, this is actually some interesting info. Elizabeth Warren pushes Treasury Secretary Munchkin for answers on overnight lending issues. I thought this was great because we need to know what's going on, at least as far as what the Treasury is doing. Not just the Federal Reserve, because the Fed is not going to tell the truth. We already know that. At least there's some level of oversight with the Treasury. We want to get some perspective. We want to get some data. And of course, what she talked about in her letter is the involvement of JP Morgan. We'll talk about that in a second here. I just thought it was interesting that we have somebody actually putting pressure on people like this, and that's a good thing. That's really all I wanted to point out. So this was actually from a few days ago, and I didn't cover it up until now. JP Morgan had the cash and the willingness to calm short-term funding markets when they went haywire in mid-September, but the banking giant said regulations held it back. Now I just need to stop and interject a point here. This institution, which is basically free to do whatever the hell it wants, that is literally too big to fail, that is interconnected in basically every other financial corporation in the entire world, they said that regulations held it back. So you know what's going to happen in the near future. Hey, you want to fix the problems? You're having an issue? Well, you got to let us do more. You have to let us expand our businesses. You have to let us take more risk. They're going to make it happen. There is no protection in place for your deposits already. There is no protection in place for everything interconnected with this financial system, whether that's your mortgage, whether that's your credit card, whether that's all of the assets that you have, whether it's your bank account and everything in between. We need to pay close attention at what happens with this particular instance. The Fed repos are important, but understand what's going on just behind that, another layer deeper, and this is just part of that. The firm has what the CEO Jamie Dimon called a checking account at the Federal Reserve. When rates on repurchase agreements spiked to around 10% a month ago, roughly 4 times what JP Morgan earns at the Fed, the bank could have profited by shifting money into the repo. It didn't. Jamie Dimon told analysts that they needed to keep that money put so it could fulfill its liquidity requirements mandated by regulators. We could not redeploy into the repo market. We've been happy to do it. It's up to the regulators to decide if they want to recalibrate the kind of liquidity they expect us to keep in that account. Watch what happens with the requirements. They're gonna change it. They're gonna make it easier for banks to take more risk. It is only a matter of time. I just wanted to include this here. It is a chart that shows us what has happened in the financial markets as they occurred. If you want to read it, you can simply pause the video at this point. I'm going to move on. Now I want to switch gears into what's happening in the financial industry. I've got a couple things to show you. This one here is worth noting. More than half of the world's banks are too weak to survive a downturn, according to a survey from consultancy McKinsey & Co. So they do these stress tests all the time. They are looking at the financial industry, and every single time they say the banks are safe. In this case here, we are seeing quite the opposite. A majority of banks globally may not be economically viable because their returns on equity aren't keeping pace with costs. We believe we're in the late economic cycle and banks need to make bold moves now because they are not in great shape. In the late cycle, nobody can afford to rest on their laurels. Think about what JP Morgan is saying. We need to expand more. We need less regulation. We need to actually have the ability to hold less, and with their fractional reserve banking models, to expand further. On the other end, we have this. It's really interesting to see the two sides of it. There's more in the article if you're interested in checking it out. They name some names. I think you'd be interested if you have a moment to read it. Vatican denies risk of default over structural deficit. So apparently there's some shortfalls at the Vatican. We'll never really know. It said the last time that was audited was 2015, I believe. They don't even have an in-house auditor for a couple years. Nobody's going to find out what's happening here. I mean, this is ridiculous. You're talking about one of the most powerful institutions in the world. It's like trying to find out what's happening with the black nobility or any of these other groups. Nobody wants to talk about that. Nobody wants to learn about that. Let's move on. S&P 500 buybacks by sector, and you could see one very clear majority: information technology. So much money has flooded into these companies. They have been financing all of their stock buybacks with debt. They issue debt, people gobble it all up, and they are buying back like crazy. In doing so, the stock price goes up, and these CEOs and executives, high-level people, they sell off a bunch of their shares. They have been doing this all throughout, enriching themselves, and people say, who cares, my shares have gone up, but they do not realize what this is doing to them. They don't understand it in any capacity whatsoever. Ultimately, just wanted to show you this chart here, the breakdown. It is very important to understand this and keep your eyes on it as we progress. Relative tech performance has been outpacing relative earnings growth, and you could see the two here that have definitely grown apart, and it appears to be somewhere around the beginning of 2018, along with so many other statistics and indicators. What they're able to do behind the scenes in these companies is way far gone compared to the average person. They do not need to report realistic numbers. They're able to get around all of this. They're able to finance with debt that the average person cannot do. Nobody is actually managing what's going on behind the scenes. We have them on the inside and the out of the government. It's a revolving door. They can do whatever the hell they want and get away with it. That's all for this video. If you found it informative, hit that like button, smash that like button, kick that like button, whatever you gotta do. Don't leave until you hit the one button because it supports me. Thank you very much. If you want to make money, if you want to learn how to actually build a business so that every month you can have passive income, this is one way to go. I built a step-by-step e-course for free, 100% for free, teaching everybody how to sell on Amazon. If you don't like Amazon, you don't have to actually sell on Amazon. You can just learn the information and apply that elsewhere. It's not going to cost you a dime, even though we have so many courses out there that are $1,000 plus. This will get your foot in the door. It's really detailed. Check it out at theamazongps.com. Hang on a second. Do you know about the financial system, the ins and the outs? These two books are going to teach you everything you need to know in the most easiest possible manner. I took out all the jargon. I explain everything as we are talking right now. I make it easy for people to learn. This is suitable for anybody on any level. Definitely check them out at the link in the description if you want the audiobook that's available at themoneygps.com. And you've made it to the end. Thank you very much. This video here is so important to watch. It's got a lot of data interconnected with this one. If you haven't seen it, definitely click on it and I will see you there.